we're back. Hey, reminder, the show available as a podcast at the top of the hour, wherever you get your podcasts. We strive to be an on-demand source for you. This special edition of Money Talk, the Annex Wealth Management Show, and we're reviewing how your investment, retirement, tax, and estate planning could be affected by election results. Up next, taxes. Joining us, Eric Strom, Director of Financial Planning at Annex, also a CFP and an EA, enrolled agent with the IRS. Hey, Eric.
Hello, Danny.
Dr. Brian Jacobsen anchoring the show today.
Hello. Yes, Eric, thank you so much for being here. Really appreciate it. So putting that EA hat on and financial planning in general, right, as far as what's going on with taxes. There was a lot of talk with the candidates about taxes. Hopefully everybody all knows now that the Tax Cuts and Jobs Act, that was passed under former President Trump and future President Trump. Given the Republican sweep that we saw, what does this election mean for the sunsetting of the Tax Cuts and Jobs Act?
Yep. So, of course, we don't know anything for sure, but and we're going to focus on individuals here as opposed to businesses to start. But what we're likely going to seeing a Republican sweep and that broader control, are likely to really look at extending the Tax Cuts and Jobs Act individual tax cuts, because there was a variety of changes that came about there. But for individuals, we saw lower individual tax rates. Remember, the 15% went down to 12, the 25 went down to 22. Very likely we would see those extended. Another major consideration was the increasing standard deduction and then the cap on your deducting state and local tax. I say those two together because that's led to many people not itemizing their deductions anymore, simplifying taxes. Very likely we'd see that extended as well, except I will say the SALT cap, there has been a lot of debate within the Republican Party specifically about the SALT cap, a big effect in high tax states, high property taxes or income taxes or both. And now in addition, we would see the higher estate tax exemption. Now, if you remember, the estate tax exemption was doubled from the Tax Cuts and Jobs Act that was sunset to cut in half at the end of next year. That would very likely also get extended. Of course, we know nothing for sure, but in general, a lot of those sunsetting, we would likely see those being extended.
Sure. Yeah, that does seem like that is kind of that agreement amongst the Republicans to extend that. We'll have to see if it happens or not because, you have to wait to see how things actually play out. But now, one of the things that didn't the alternative minimum tax, that AMT, what happened with that and what might happen with that? It sounds so innocuous, right? It's an alternative and it's a minimum, but it's a tax. But there was nothing alternative about it and it really wasn't a minimum either.
Yeah, and you may not have this in your recent memory, but prior to the Tax Cuts and Jobs Act, so 2017 and earlier, you had to do your taxes twice, and alternative minimum tax was actually affecting a lot of people at that time. Now, it got defanged and not eliminated by the Tax Cuts and Jobs Act, so it still exists, but unless your income is $1 million and higher, you never really see it. Whereas before it was affecting a lot of people, you did your taxes twice, and whichever was less favorable for you, that's what tax you had to pay. And now, I would say likely we'd see the defanging of it where it really lost that edge and is not affecting very many people. That would likely get extended as well.
Okay, that would be reassuring for a lot of people, I'm sure. In the news on the campaign trail, there was also a lot of talk about various provisions, proposals about maybe not taxing tips, not taxing Social Security, no tax on overtime pay, all sorts of goodies that were thrown out there. Do you think any of those could actually become reality?
Well, it's interesting because as you talked about, there is going to be negotiation, even if you have full Republican control between the House and the Senate and the presidency, there still is the House Ways and Means Committee and people, putting influence there and senators and the president himself. And really between all of that, there will be negotiation. Some of these provisions you mentioned just now, Brian, these are providing very targeted relief to specific groups. And we want to avoid, revenue loss where possible. So even with those majorities, we're going to have negotiations. And so even though in general we're expecting now much more likely to see some of those existing tax cuts extended, there might be negotiations. Maybe we trade a little SALT cap for a little more no tax on Social Security. It's all going to be that gamesmanship where revenue raisers might come into it as well, right? Because you do a 10-year projection and you don't want the budget to look that bad. So you really need to have that negotiation. We have a lot more clarity now, of course, than we did a week ago. But really, we still have to wait to see what becomes a reality based on all these negotiations.
Sure. Now, what about business taxes? We know that with the Tax Cuts and Jobs Act, the corporate tax cuts were made permanent. But most businesses in the United States, small businesses, are pass-through entities. Anything going on there?
Yes, the pass-through entity deduction that was brought to make parity between the other corporations is called QBI, and that was that 20% deduction on pass-through income. That is expiring at the end of next year. Almost certainly we're going to see that extended, I would imagine. That's a big one. Bonus depreciation as well. That's been phasing out, probably seeing that coming back. Again, we don't know for sure, but likely based on the discussions, that's what we would see.
Tilts the odds in the favor of that, yeah. Now, with all this going on, if you're somebody out there, a do-it-yourselfer, you're thinking about personal tax planning, what should they do? Well, what action should they take?
It's fun to watch all this news. We want to focus on what you can control. You can control if you're going to do a Roth conversion. You can control if you're going to give to a 529 plan. You can control donating in a smarter way from a tax point of view. And I could go on and on with many other things you can control. Meet with your advisor, do that year-end tax planning. But if your advisor doesn't do tax planning, or maybe you don't have an advisor at all, please go to annexwealth.com, click on that Get Started button. We are open for business, and we'd love to talk to you about those tax planning items that are within your control.
Eric Strom, Director of Financial Planning at Annex. Thank you very much.
Thanks, Danny.
Hey, we're ready for you. It is time. We're in Brookfield, Lake Country, Mequon, Appleton, downtown Milwaukee, right inside the Pfister, Madison, Naples, Florida, Libertyville, Illinois, always right on the computer at annexwealth.com. This is Money Talk, the Annex Wealth Management Show, Saturday, November 9th. We're going to be right back on 620 WTMJ.